June 17, 2022. Today I just want to give you a recap of the market. So as you can see, our day trading was not very successful. This whole day choppiness like typical quad witching. Market originally has a bounce. We tried some call, got washed out. And then market quickly pulled back on the Federal Reserve. When the officials say there's likely going to be a 75 bips rate hike in July. And that just make a market downtick for an hour, holding the year low 362. 200-day EMA on weekly 363. And then Federal Reserve actually provided another report today saying that the Q2 GDP is actually moderately rising. So it's actually better than expected results, and we see market slowly pushing out from had a quick jump on 362 to 365, and then 365 to 368 pretty slowly. Still cannot reclaim this 370 resistance today. Right now, power witching, so we might see potentially pretty crazy price action into the close. So if you look at the daily chart right now, SPY very choppy, and that's where we're not trading much, and especially on swing trading. Failed to reclaim this 4-day EMA as well at 372. The downtrend still intact, but we start to see the downside momentum slowing down. Last week after the interest rate FOMC, I would see the SPY pop into a 4-day EMA, got rejected, big gap down yesterday, and today just kind of sideways. Still cannot reclaim 4-day EMA, probably going to be next leg down, but potentially going to be a little more choppy in consolidation, and we have seen that before. After the major sell off, if we go back, I think our swing is very lagging today, and they really have no excuse. This is an M1 chip apps, Apple Mac with 16GB RAM. I mean, if this laptop cannot handle it, who else can handle it, right? Yeah, we see a big sell off before, right? And similar chart. Failed to reclaim the 4-day EMA doesn't mean the market cannot pop. Just going to be choppy. And I remember back to this mid-May, we're losing money constantly on day trading and swing trading. Learn the lesson, decide to reduce trading. Especially now SPY is on the lower range of this downtrend. More likely it's going to pop than continue to sell off. Especially SPY QQQ weekly and daily RSI are around 30. Most of the sectors and individual stocks have already been oversold already. So that would be a little careful on trade chasing the downside, but it doesn't necessarily mean we cannot see a further downside. Just the downside momentum is slowing down. Going to see more consolidation. Same thing with tech. Potentially going to curl back up, hit the EMA resistance, and reject it next leg down. But leaning towards sideways right now. So same thing with Nasdaq QQQ. Fix is the same thing, and glad today's small account we take out that UVXY, make a decent 40%. Right now, just in the choppy zone between this 30 and 35. Above 35 usually means the market is in extreme panic. Like I said, we're probably going to see more company bankrupt. Fix any major sell out, we always see fix above 35 to 40. We still haven't seen the fix breaking out that range in this round of sell off yet. So two signals suggesting probably we haven't seen the bottom yet. But yeah, we just have to see. Right now, fix is not the best play in town. Usually the best play in towns like this, right? Downtrend breaks, 4-day EMA cross, has momentum upside. That's a time we can bank like a few 100%. Right now, we just either have to use vertical spread or day trading, play around with it. One sector we definitely missed the downside is the energy, which I kick in myself. After the FOMC came out with a 75 bips rate hike on Wednesday, the market were concerned on recession just accelerated, and that just make energy quickly sell off. So Wednesday everything was down, right? Yesterday the market was actually up, but energy had a really big pullback, 5% again. And today another 5%, a little oversold. If you look at most of the major energy stocks, their daily RSI are all at 30 or below 30 already. So a little hesitating to chase it further downside. Daily 200 EMA was still averaging 66 and 68. Rome also mentioned that as well. But if we look at the July 1st, buying a little more time, long XLE puts, at most hitting this 66 to 68 level, we're probably going to make 100 to 150%. The risk reward is not as good, while energy has already pretty much oversold just within the 5-day period of time. While energy oversold, there's a reason, right? Crude oil start to pull back. Watch this guy closely. The energy price can push out this high. It can also sell off pretty hard. A lot of events coming out are potentially going to make a really big move on this crude oil market. First of all, looks like European Union is kind of and NATO are pushing Zelensky in Ukraine to start negotiate with Russia. Right, if Ukraine war really start to ease, crude oil price will start to drop. And also right now the global concern on the recession means the demand will start to drop. We have seen that before. That caused the crude oil to pull back to the 2010. So we can see that happen, and that can be the next big trade as well. If you look at this guy, right? Still remember, I was loaning a crude oil a bunch of ETF back to those days, right? And once the recession hit, then the global oil demand started to drop. The crude oil actually dropped from 148 per barrel all the way down to $40 per barrel. So this is definitely a big trade coming up at one point. I don't know if we're going to have such momentum throughout this 5 months like we've seen in 2008, when that financial crisis way worse than the current one. But like I mentioned in the Zoom live earlier, it's more likely going to be like this: drop down to 100, consolidate, breaking 100 key resistance, go down to 90 or 85 key resistance, and then consolidate again and break down to the key resistance 70 again. So yeah, could be a big trade. I've been watching it closely. And also Biden's gonna visit, forget about this, Saudi in July. And potentially Saudi has already said if Biden can visit, potentially they can collaborate with US by increasing the oil output. That can be another big downturn for the crude oil as well. And when the crude oil start to get controlled, we're gonna see, of course, energy stock gonna sell out really hard. In the meantime, we start to see 10-year yield actually start to breaking down already. So right now, the break the EMA support, probably going to gap fill at 31.4 at some point next week, holding that, and have some consolidation around this level. And if TNX can start get controlled, I mean, it's still going to curve back out because Federal Reserve will continue to raise interest rate all the way until the first half of next year, and they won't decrease the interest rate until 2024. So this TNX can still slowly climb out to 35 to 40 the second half of this year, but as long as it goes up slowly, it's not going to cause too much damage. When we see accelerated downside, usually we need the yield to quickly go out like this round, right? 27 to 34. And like I mentioned a few weeks ago, this round, the damage on the stock market is probably not going to be as bad because the TNX is only pushing from 28 to 35. Last time we caused a lot of damage. TNX actually went all the way up, right, from this 17 to 32. So the bottom is actually getting closer and closer. So definitely keep an eye on it. Still waiting for the potentially one more downside to start to add more positions on the long-term investment. Right now, I'm just still waiting. Especially now the SPY QQQ small cap downtrend on daily is still intact. We would like to at least wait for more confirmation, at least reclaim some EMA support first on the daily chart before getting in. It's impossible to get a bottom correctly, but adding slowly and confirm that at least we have some EMA support on the general market is usually not a bad idea. Yeah, so we talk about energy. Same thing with energy. The recession demand concern will also tank the material. And we have seen that happen in 2008. We're seeing this again. We make the downside on TAC and IWM, but actually materials actually got sold out pretty hard. We take out all the material long-term investment right at the peak, so I'm pretty happy about it. Make like 60% on Nicor, which is a steel name. And then also the last economy cycle, usually you will see the stronger biotech. Which has been holding out really well from March to April, right, when the general market sold out really hard. But since April, you start to see biotech start to pull back pretty heavily as well. That include Eli Lilly, Pfizer, all those solid biotech. So that's telling us the market is going to the last session of this economy cycle, potentially another signal that a bottom is getting close to. But of course, if Fed is continuing going to reduce liquidity, we're going to see some sectors are being hit pretty hard, which I think is the crypto. So if we look at the crypto sector, actually currently on Twitter, I make a poll. Feel free to check it out. The question right now is, can Bitcoin even hold $20,000 this weekend? Right now, daily chart is bear flagging. 4-day EMA cross looks like it still has more room to the downside. And we just posted on Trading News channel. Actually, one more. That one's kind of known already. BlockFi. They have a hard time raising more cash. And if they cannot raise more cash, they're probably going to bankrupt. And they actually over leverage their position. And you're going to see more and more hedge fund on the crypto space to have margin calls and breakdown. And that should trigger the next leg down on crypto, and that can have some hollow effect on the general markets. Watch this long weekend 3 days. Highly doubt this Bitcoin can hold up this $20,000 level. Speaking of that, we should probably throw some lotto at Coinbase, MSTR, those crypto names over the next week. We still have 15 minutes. Same thing with Ethereum, right? This is the last chart we're going to talk about. Bear flagging, right now daily chart, highly doubt will break whole 1,000. I'll probably start at around 800 or 500 if we can really touch that. I haven't set any buy limit order yet. I want to see the price action this weekend, potentially breaking down. Want to see if that $800 level hold. I know a lot of you guys hold shipping, so I just want to cover this as the last one. So Zim shipping, the JP Morgan actually upgraded as neutral, so we started to see this stock price bottom. Not an easy short because it has such amazing dividends, about 28% annual dividends right now at this price. But the container shipping rates are dropping with the global demand dropping as well. So I'm not really interested in loaning Zim here right now. But yeah, we'll definitely keep an eye on it. Still amazing stock, so great management. Just the macro economy doesn't support a really big upside here anymore. So I'm gonna stop the